Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look at the Aussie versus US dollars. The dollar continues to strengthen. Let's take a technical look at this currency pair and see what the technicals are telling us. I'm looking at the hourly chart in this currency pair, and if you take a look at the high price that we saw in trading yesterday, that high price actually tested the high of this trend line here, which connected the high price going back to, I guess that's October 11th to October 25th right here. The high price came right against that trend line and found willing sellers against that level. Also near that level is the 50% midpoint of the move down from the October high. That was actually the end of September high right there to the low price that we saw in trading last week. That 50% comes in at 0.6385, and the high price yesterday fell short of that and also stalled against the trend line. So there's reasons to sell here, not to mention this other swing area, but let's just say the 50% of the trend line. And it was in trading here today, we saw additional momentum to the downside in the Asian session that saw the price move down toward our 100-hour moving average. Now, we did find support buyers against that 100-hour moving average in the first test and saw the rebound back to the upside. It saw the price almost get back to that trend line before rotating to the downside in the last few hours, or at least in the New York session. We've seen continuing dollar buying, which has now pushed the price below the low price from earlier today, and also below the 100 and 200-hour moving averages. You can see these moving averages have been moving sideways of late. Why is that? Because of all this, the ups and downs and ups and downs and ups and downs. And we are now on a path more to the downside as the price now trades below those two moving averages, or the bias shifts more to the downside as a result of that. We'll be watching those two moving averages as close resistance now. We'll see if the price can stay below those levels, keep the pressure on. On the downside, we do have this swing area, which we are now testing between 0.63269 and 0.63344. We have the 100-hour moving average at 37. So really, this whole area right here needs to be broken to increase the bearish bias on the downside. So stay below the 100, stay below the 200, move below the 26.9, 0.63269 level. Opens the door for further downside momentum, and then we'll start to look toward these swing areas down here between 0.6295 and 0.6298. Let's call it 0.63, and then we look toward these swing areas all through here, where we had a number of different swing lows that are an extreme ahead of the or a target ahead of the extreme for the month, which happened last week, where the price moved below this area. So willing sellers pushing down to 0.6270 around that level before rotating back to the upside and saying, that was a failure. But this area down here between 0.6284 to 88 will still be targeted on the downside. So right now, watching the 100-hour moving average stay below that level is more bearish. Move below the 26 level and opens the door for further downside. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.